I think what we're seeing here is going to be the greed, the euphoria that we see into any major market bubble, which I think we are right now in, and yeah, of course I think we're going to see Bitcoin. I'm going to think we're going to see crypto in general do fantastically well into the, let's say, the next coming 3 to 4 months. But after that, I think it's going to be very bad times for crypto and for risk assets around the world.
Holy shit, so you're talking 3 to 4 months. I thought that you were talking about like a blow off top that's going to last for like another 18 months. You're saying 3 to 4 months and then this whole party collapses?
Oh yeah.
I agree on some points of what Henrik said.
Okay,
I think
so you're
November,
still
December, then
so you're still buying
top.
you're still buying Bitcoin up until November, December, when you feel that the behavior becomes the blow off top of the blow off top. And then after that, where do you position yourself? Do you sell your Bitcoin? Do you sell your risk assets and go back into cash? What's the trade after the collapse?
Henrik Zeberg opens the discussion with a bold statement about the current market conditions. He believes that we are in the midst of what could be described as a greed and euphoria phase, characteristic of any major market bubble. According to Zeberg, the next 3 to 4 months will likely see cryptocurrencies, including Bitcoin, perform exceptionally well. However, he warns that this period of strong performance will be followed by a significant downturn, not just for crypto but for risk assets globally. Zeberg's concern is rooted in the signals that suggest an impending recession, signals that he argues have been flashing for the past 6 months. These indicators, some of which began to appear last year, are not to be taken lightly. Historically, when these signals flash, they tend to be highly accurate predictors of economic downturns. Despite the current sense of optimism in the markets, driven by increasing liquidity, Zeberg cautions that this liquidity influx often precedes the end of an economic cycle, rather than the beginning of a new one. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think what we're seeing here is going to be the greed, the euphoria that we see into any major market bubble, which I think we are right now in, and yeah, of course I think we're going to see Bitcoin. I'm going to think we're going to see crypto in general do fantastically well into the, let's say, the next coming 3 to 4 months. But after that, I think it's going to be very bad times for crypto and for risk assets around the world.
Holy shit, so you're talking 3 to 4 months. I thought that you were talking about like a blow off top that's going to last for like another 18 months. You're saying 3 to 4 months and then this whole party collapses?
Oh yeah. I mean, we are closer to a recession than I think anybody really understands. If you look at the recession signals that have been flashing over the last 6 months, and some of the early signals that I have even flashed last year, and they are not timing indicators, but when they flash, they are very, very accurate. And so the problem is simply that we are all starting to party because we see liquidity coming into the system. But when liquidity is coming in, that's normally because the central bank starts to stimulate the economy. And when they do that, we know it's late party. But if you look at the real economy, if you look at the consumers, we can see they're struggling. We can see delinquency rates on credit cards. We can see that the unemployment rates are starting to move up. And if you look around the world, there's really no place that looks good. So I think what you saw in Japan just a couple of weeks ago is the beginning of the whole thing. I think the world markets around the world has topped, and I think that the U.S. markets will move into a blow-off top. It's around 61 to 6,300 on the S&P. A strong move, maybe even stronger on the Nasdaq, but that's it. And it's going to be fast. And the situation, as I see it, is very, very similar to what we saw in late 2007 into, let's say, Q3 of 2007.
The bull markets and Bitcoin, we've been in a bull market for 18 months, and they last a whole lot longer than 18 months. So I think 3 years is kind of my sort of minimum for this bull market. And I would say even longer than that, because we have these ETFs, which are, really just picking up capital now. And we've really just seen the beginning of the tip of the iceberg there. So it wouldn't surprise me if this thing lasted longer than 3 years, but I think we're going to go through 2020, all of 2025. That's kind of my gut feel.
I agree on some points of what Henrik said, and obviously we have had some negative indicators in our economy. You're seeing the 2-year, 10-year spreads on the treasuries. The inversion is uninverting. You're seeing the spread between Fed funds and the 2-year inverting. You're seeing the SOM indicator being tripped with unemployment. You're seeing negative numbers coming out of the retail sector. However, you have to pull back a little bit, in my opinion, and go a lot further back and up and look at it from 100,000 feet.
I said I also have a target for Bitcoin at around 120,000. So
B-
I'm
by
very long
when?
Bitcoin and everything related to crypto by late this year.
Okay,
I think
so you're
November,
still
December. Then
so
we'll,
you're
then
still
we'll be on
buying.
the top.
You're still buying Bitcoin up until November, December, when you feel that the behavior becomes the blow off top of the blow off top. And then after that, where do you position yourself? Do you sell your Bitcoin? Do you sell your risk assets and go back into cash? What's the trade after the collapse?
Everything related to risk will be sold off, and where I'm at that point, yes, and then you'll be at cash for a certain amount of time, and then there'll be or TLTs, U.S. bonds,
Yes.
German bonds, and then you'll have a period also. But the moment when the Fed reacts and they start to this, I think it'll be mid 25. You want to move into something like gold and silver and gold miners and all that, which will be a commodity boom that will be starting. And everything relates to commodities can be interesting there. But that will be it. So it'll be a whipsaw. It'll be like full risk on now. It'll be like okay, then it'll be cash for some time or very defensive, and then I think it'll be getting ready for that kind of stagflationary environment. I think can develop after the Fed moves back in again.
Fred, what do you think? I mean, it sounds
I think at the end of the day, Ran, I think macro doesn't matter all that much to the price of Bitcoin. I think Bitcoin is going to grow. I'm a believer in sort of this power law theory. I think we're going to grow, and I think we're going to get to Bitcoin 1 million, within the decade. So I do think we're going to get there, and yeah, we're going to have up and downs. I was a professional trader. I don't do that anymore. So I'm very, very long Bitcoin, and I don't expect to trade my Bitcoin. Now, if we hit something like 250,000 in 2025, I might take 20% off. That would be kind of my strategy. But my plan is to just hodl right through and, right through this entire cycle and potentially right through the next one. That's kind of my general plan.
James, where would you position yourselves?
Yeah, I'm closer to what Fred is thinking. That I'm such a long-term thinker on this that I'm not worried about this cycle, and I believe that regardless of what kind of stagflation we get into, I don't think that our central bankers and our leaders will think as rationally as Henrik. I just don't believe they will. I mean, we've seen the idiocy of the potential policies coming out of the current administration. So I believe that they will print because their incentive is to print and get reelected. Will it fix the underlying problem of the economy? Likely not. It'll just make some things worse. However, it will drive a lot of the economy because, as we're seeing right now with fiscal dominance, it has been driving a portion of the economy, and it will continue to do that. In the United States, we're such a large sector service. We're sectors. We're a service sector driven economy now. I mean, and financial services, and so those are really big. They're just too big to ignore, and they're going to continue to just paper into that, flood liquidity into that part of the market, and hope that it does well. The things that you can't handicap that are very difficult to know is, do we get some sort of productivity miracle out of AI in the near future, 5, 7, 10 years? Very possible. We don't know. The other thing that you don't know is as the US dollar gets stronger around the world, many other currencies are hurt, and many other citizens are hurt by those currencies. And will they turn to Bitcoin as a store of value for them because they can't get a hold of dollars? And that's another thing that you have to think about. We're so U.S. centric here. Henrik isn't, but we are here. That Bitcoin is a store of value and an investment tool. But we don't have to deal with the oppression and the hyperinflation of economies that they will pile up over the next 10 years.
The discussion also touches on the potential impact of technological advancements, particularly in artificial intelligence, on the economy and markets. There is speculation that AI could drive significant productivity gains in the coming years, which could offset some of the negative economic trends. However, the panelists agree that the need for hard money, like Bitcoin, will remain regardless of these technological developments.
I just want to say one thing on James's point there, right? Because you mentioned AI. And I think, Vinod Khosla posted this great paper. I forget who wrote the paper. But, this stuff's coming faster than we think. And it's pretty clear that if we have a 2030 timeframe, we're talking about, superhuman intelligence by 2030. Not just Chat GPT, but something close to a sentient intelligence. That's kind of where we're going. And now, whether that's Hal of the movie 2001, or whether that's just an artificial intelligence researcher, right, who can look for cures for cancer, that stuff's coming within the next decade now. And that's just the reality. So I actually am bullish on that longer term, not even that longer term, medium term, within the decade. I don't think it takes in a way, in any sense, from the Bitcoin story, because I think we need hard money and the world needs hard money. Most of the world is not even in the US block, right? Most of the world is just discovering. It was interesting on one of my spaces, this fellow from Nigeria Zimbabwe was talking. And he'd been through the Zimbabwe inflation. We were talking about Bitcoin in Zimbabwe, and he goes, "Yeah, some people are starting to get interested." And I'm like, "What does it take to get involved in? What does it take? A $1 trillion Zimbabwe note that doesn't even get you sort of to consider it." But it's a process, and we're learning it. These fund managers are learning it, and I think within the next couple years, we're going to have a change in understanding of Bitcoin, specifically Bitcoin, not crypto, right? But specifically Bitcoin. I think people are going to realize that this is a better version of gold, and that's kind of part of my thesis. I think James would agree with me there. That's sort of independent of macro. That's just people understanding and adopting this asset. That's it.
Yeah, with the ETFs, we didn't even get to talk. Obviously, the three of us could talk for hours. But
I see that.
with the ETFs, it's going to force institutional investors to do their work and understand the asset and why it's so different as a separate asset class. And in my thesis, that they will start to allocate to it separately over the next months and years, and in due time, as we see this perpetual high inflation because of the environment we're in, they will start allocating away from bonds and to Bitcoin as a store of value, because they know they're going to get negative real rates on long-term debt, and that's just reality.
The conversation concludes with a reflection on the role of institutional investors in the future of Bitcoin. The introduction of Bitcoin ETF is expected to force these investors to take a closer look at Bitcoin as a distinct asset class. Over time, as inflation persists and real interest rates on long-term debt remain negative, institutional investors might increasingly allocate to Bitcoin as a store of value, further driving its adoption and price appreciation. Please like and subscribe my channel.